Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. This is another video edition, so make sure you head over to Spotify or the YouTube to check out the visual version of this. Today's episode is all about what I call the greatest crime in trading, self-sabotage, right? It's something that holds so many traders back, even when they already have the tools for success. So what we're going to do today is I'm going to break down exactly what that looks like by sharing you a story from a trader that I recently spoke to, and then more importantly, share 5 ways or 5 tactics that you can use to avoid or help your situation. Now, as I look for the message that I'm supposed to read you, do me a favor, hit that like button, follow if you're not following the podcast already. And here we go. So I was recently speaking to a trader who was struggling, and sorry, I've got other things to watch on these screens, so I'm gonna look over here. And the conversation with the trader, he said this. He said, well, actually, I'll try to share it in summary from this point. I was trading with a customized strategy for almost 1 year, and I realized it is not good enough, so I decided to test another customized strategy. In backtesting, everything was good. It was pretty solid, so I decided to go for a forward test with a low capital in 2 seasons. So what I'm guessing the trader meant by low capital is that they started, and this is a little bit different in forward testing, right? So typically when we talk about forward testing is going to be similar to demo trading. Back testing, as you spoke about in the previous podcast, is when you're going back in time and you're looking at historical data to test your edge, test your strategy, make any tweaks. Once you pass that back testing process, the next phase is forward testing. And forward testing is essentially finding your signals in real time. Believe it or not, but there is a big difference between going through historical data and being able to find stuff when you have all the time in the world, where you can go back, you can double check, versus looking at stuff in real time where there's that open blank space on the side of your screen and you only have a set period of time to actually discover what you're discovering. Now, with forward testing, you're typically not using any money for that. You're just, making a habit of analyzing charts as you would if you were live trading, and either using a demo account or just jotting down like I would have taken trade here, stops would have gone there, all of that stuff. But one thing I do recommend after the forward testing period, after you can train yourself to do everything that you need to do in the market, so not only analyze, but put on orders the right way, manage to trade the right way, X, Y, and Z, all that fun stuff, is when you start live trading, start with a small amount of capital. One of the reasons that traders get into trouble is because of emotional sabotage, and we'll get into that in a little bit, but a lot of that emotional sabotage is due to us being very emotionally kind of tied to money. So when we place a trade, it's no longer just, oh, this is fun, it's a trade, it doesn't mean anything. Now it's like, oh my gosh, I can lose money, or oh my gosh, I can make money, and then we're emotionally swung back and forth a lot more. So I do like that tactic of start small, right? Small enough that a win doesn't make you happy and a loss doesn't make you sad. And then as you gain more confidence, allow yourself to trade bigger and bigger sizes. So our trader said, I decided to go forward tests with a low capital for 2 seasons. And the result was the same as the back testing results for the first 5 consecutive profitable months. Oh, with proper decision making. Everything was good. I was doing my job and I got excited. Afterwards, I deposited more money into my account, and then September, the choppy market came. I didn't know historically what was going on, nonsense movement from my point of view. Drawdown said hello to me. It was more than general in my strategy, meaning that it was more than what the trader expected to take based on their backtesting results, I'm assuming. Then I realized something was off. I broke my rules. Now, before we hop into the next part of the statement, September was a wacky month, right? This year has been a little bit wacky. In most cases, we see slow, choppy movement during the summer, and then we see more directional movement in September. This year has kind of been the opposite. We've seen a lot more directional movement, more movement than usual, more volatility than usual this summer. And then September has been very choppy. And that's also because it's been a unique year. We've got all types of monetary policy stuff coming out. For example, in September, I think we've had every central bank have an interest rate decision, with many of those banks actually making changes or actually putting forth some forward guidance that said we're going to do changes in the future. So with interest rate decisions being the biggest gear that turns the market, it's no surprise that the market has been on edge. We also have the kind of global trade war situation going on with the Trump tariff. So that's introduced a whole nother element into the market, which kind of kept the summer more busier than usual. So it has been a unique year in the markets. So continue on. The trader says, after I realized I broke my rules, the big issue that I have is even when I know what is right to do, I can't control myself. I tried so much to fix this problem, but I don't know what to do. I'm sorry if this is too long. I tried to share it briefly, and the drawdown is 15% by the way right now. It's so frustrating when I know what's the bad and what's the good, still going for the wrong choice, then self-sabotage kicks in easy. So I would start off by this, first and foremost, hats off to this trader for at least understanding that they're the problem. So many traders blame everything else. They blame the system, they blame the broker, they'll blame Trump, they'll blame central banks, right? They'll blame everyone but themselves. At least this trader is saying, hey, I'm in a bigger than expected drawdown, and I understand that partially it's because I am breaking my rules, self-sabotage. I just can't figure out how to stop myself. So here goes 5 tips for you. So the first one is going to be avoiding triggers. Now, what is a trigger, you ask? Well, the trigger is the thing that causes the thing to happen. So whenever we make an emotional mistake, whenever we self-sabotage, it could be because of any one of these various reasons, right? It could be because of FOMO, fear of missing out. It could be of I'm fearful to get into a trade. It could be I'm greedy. No matter what it is, there is something that causes that. These emotional, right, feelings don't just come out of anywhere. Something is causing it. And it's our job as traders to figure out what that is. This is where journaling comes into play. And we want to journal before, during, and after our trade. How do we feel as we're doing our analysis before I enter the trade? How am I feeling while I'm entering the trade? What am I feeling, or what have I felt after the trade? This is going to help us uncover what these triggers may be. Maybe you write down, man, it was a slow, boring day in the market. So I went on Twitter and everyone on Twitter was talking about trading. So then I started wanting to trade myself because I felt like I was missing out. Write that down. That's telling you FOMO. That's telling you that, hey, going on social media and getting those outside influences is something that influenced you and put you in the position to make those mistakes. Maybe you're coming off a loss. You got really excited about a trade that you thought it was going to win 100% of the time, and then it lost, and now you feel bad, and now you want revenge. So you got to get into another trade right away. Boom, you've just acknowledged that, hey, revenge is what's causing this. Maybe you had a winning trade, and maybe like the past video we spoke about, that you didn't get all of the move and you feel like you should have had more, and now you make a mistake on your next trade because you're greedy, right? All of these are emotional triggers. Find out what is causing you to feel the way you're feeling, and that feeling is what's leading you to make those mistakes. Once you can figure out what they are, the better opportunity you have to plan on how to deal with them. 2 is going to be distract yourself, right? This is the good old pattern interrupt, right? When you feel yourself getting into a state of whatever it is, a state of making a mistake, immediately interrupt yourself, right? Do something else. For me personally, after each of my trading sessions, my active trading sessions, I get out of the house and I do something athletic. I did boxing today. I'll go for a workout. I'll go to the gym. I'll go for a run. I'll maybe watch if it's bad outside, I'll watch something on TV. But I do something to get away from the charts, because what that does is it gives me a time to really decompress. I can leave, especially working from home, I can leave kind of business mode and I can go and do something else. And when I come back, it's kind of like a fresh slate. I don't know how true this is, but I've always heard that when we have these urges, these desires, these temptations to do something, whether it's trading related or like diet related or any type of other bad habit, I've always heard that those urges usually only stay present up to like 30 minutes max. So if we can distract ourselves for that 30-minute period, we're less likely to have those urges and much less likely to give in to them for the future. So maybe do something where you plan a 30-minute reset period whenever you feel those urges come on. Number 3 is going to be urge surfing. And this is really an underrated one. This is one that took me a while to figure out in my personal trading journey, right? So urge surfing is this. Think about it like riding the waves, right? The natural thing that we think whenever we have urges and whenever we're doing bad stuff is that we are bad, right? You beat yourself up. I am a negative person because I entered a trade and I gave in. If you're on a diet, I'm a bad person because I was supposed to not eat any sugar and now I'm eating sugar, right? And like we punish ourselves, we punish ourselves. And in our mind, we think it's just, but ask yourself this question. Is it really hurting you to punish yourself, right? You can do all the type of psychological research you want, even with like kids and whatnot. If you keep punishing a kid, that is a less effective way of changing a behavior than positive reinforcement. Now, I'm not saying you should reward yourself for breaking bad habits, but what I am trying to say is that we need to accept the fact that we are feeling the way we're feeling and that we are allowed to feel that way. So again, I told you I struggled with this for a while. My trading mentor was military, right? So when it came to trading psychology, it was pretty much like, hey, just toughen up, don't make mistakes, don't do it. So I convinced myself that I was this robot, that I was an unemotional human being that didn't feel happiness or sadness or fear or greed because I wasn't allowed to. And what happened was, and I've done this in other versions of my life, is that I would do a good job at first of kind of avoiding, just like brushing off to the side. But what I was actually doing was I was letting it build up inside of me. And although I'd be good for weeks, maybe even months, eventually there would be some trigger that, triggered me to do bad things. And there was so much of the bad stuff built up to me that I never kind of repressed that it just explodes out. And then it happens in a big way. I told you the story before where I've had hot streaks where I've gone like 3 straight months of like hot streaks in the market, right? Making money hand over fist, and then I'd blow it all in a few weeks, right? Those were those situations. I would be so built up that one mistake would happen, everything would blow up, and it would just come like that. Again, same thing for people that relapse or like, we'll use the diet technique, right? For someone that cuts off sugar, they go cold turkey, they cut off sugar, they don't eat it for a while, then all of a sudden you catch them passed out on the couch with a big sleeve of Oreos and a chocolate cake because they took one little bite and they just gave all the way in. So we need to accept that we are human beings. We are emotional, all of us, even ones with little empathy like me. We are emotional, and that it is okay to feel this way. I am allowed to feel happy when a trade wins. I am allowed to feel sad when a trade loses. I'm allowed to feel like I want more out of a trade. I'm allowed to be afraid to enter a trade. I'm allowed to feel the temptation of entering a trade early. That is okay. But just because we're accepting that, yes, we can feel that way, doesn't necessarily mean that we have to act on it. But I do think having the conversation with yourself where you accept it, that you understand it doesn't make you any less of a person, that you're not comparing yourself to someone out there, the perfect person who never makes mistakes, right? This is the same thing like social media where you see the perfect pictures of everyone and now people grow up thinking they can't have any flaws. Like, no, it's okay. Once you accept that, you'll actually find that you're less likely to make as many mistakes because you're no longer shooting for perfection, which is unachievable. You're just shooting to be good enough or just a little bit better. Number 4 is the mental reset. This is going to be very similar to the pattern interrupt, but more kind of trading specific. So let's say you're in a situation where you're feeling emotionally vulnerable, but you're in the middle of your trading day and you just can't go away for 30 minutes because you still got a day trade. Something I used to do is this. I would reset I called it resetting the computer, with me being the computer, meaning that I would take out my trading plan. It's actually somewhere back here, if you can see this on the editing, right? This is my original trading plan, right? I would actually take this thing out in the middle of my trading day, right? I did this before my trading day started as well, but I would take this thing out in the middle of my trading day. I would open it up. It's all over the place now, but you can kind of see it in here. I would open it up and I would read through the entire thing word for word from front to back. Now, it wasn't that long, only like 5 pages or so, but what it would do is it would serve as, one, a pattern interrupt. It would give me that time between just staring at the charts, looking to do bad things and distract me by doing something else. but it would also remind me of the things I'm supposed to be doing and the things I'm not supposed to be doing, right? So reading the trading philosophy and psychology part of my trading plan would give me a mental boost. It would remind me that, hey, I am good enough to trade. I have put into work. I deserve to be successful, that I'm not going to win all the time, that I can't quit. I can't give up, right? All the psychological things that I wrote in there to kind of pump myself up. I would then go through my trading plan where it's word for word, step by step, what I'm supposed to be doing. That would remind me like, hey, I can't take this trade because it didn't meet my rules. If it did meet my rules, I would have read about it in here. So it's a kind of a reminder of like, hey, Akil, you can't do this. And it's like yeah, I guess you're right. So it was something that really took me out of that emotional situation and had me seeing things clearly a little bit. So I certainly recommend that for kind of a different version of that pattern interrupter, different version of that distraction. The last one would be reach out to an accountability partner. Yes, the trading plan, if you have no one else, is a good accountability partner, but at the end of the day, it's just you and your words. You want to reach out to an actual person. Now, I know most traders are lonely. We don't have people to reach out to. I'm glad this trader found me because I'm acting as their accountability partner right now, I suppose, and recording this podcast. But it's hard to do it alone because when we are alone, we are not really alone. It is us, but then it is our evil thoughts telling us all the evil things to do in the market, right? It's the two, consciences on your shoulder, the one that tells you follow your plan and do good, and then the one that tells you to break all your rules. Then at some point during a drawdown, this one punches this one in the face and all that's left is one voice and now you're just giving in, right? That really happens in trading. I'm not going crazy, I promise you. But reach out to accountability partner. When we are stuck with our own thoughts, we tend to convince ourselves to do the things that we ultimately want to do, even if those things are not nice things. But by having a difference of opinion, sometimes it resets us. So let's say I'm in a situation where I just lost a couple trades. I'm in a bad mood and I'm like, man, I gotta get revenge on the pound dollar, right? And I share with my buddy Troy. I'm like, hey Troy, looking at this trade on the pound dollar. And Troy's like, hey, I thought you weren't allowed to trade that. Okay, well now what do I do? You have two choices. Either you lie to Troy and be like, no, I am. That's just part of the plan that I didn't tell you about. Or you accept that, yeah, Troy, you're right. And more times than not, you're going to listen to that second opinion because you're going to value that relationship, right? You don't want to, I tell traders this all the time in a live room, right? So for you guys that are unfamiliar, I run a live trading room over at tier1trading.com. Here comes the plug. If you're open to join us, take part in that 14-day risk-free trial membership. Risk-free means there's no auto bill. You get 14 days on the platform. You can join us in the live room. You can take some courses. You can download some software. And after 14 days, you're just kicked out. So it's no sneaky sales stuff. But great conversations in there. Many of our podcast episodes come from in there. But I tell the traders this all the time with the live trading room. One of the reasons that I think running that live trading room for so many years has made me even more successful as a trader is because it holds me accountable. The traders in there, they know my rules front to back. They know how I trade. They know how I look for. If I'm ever in a situation where I'm like, hey guys, I got to trade this euro dollar, someone is going to type in, hey Akil, I thought you needed a higher high, higher close on the daily. Then I have two choices. Either I just straight out lie and be like, no, I don't, but there's a track record for 15 years of recorded sessions and video content telling me that that's not my rules. Or I accept it and be like, yeah, you're right. And again, because I value those relationships, because I actually value integrity and whatnot, I'm not going to lie to you. I'm going to be like, you got me. And what that's doing is it's stopping me from making a mistake, or it stops me from even making the mistake before I make the mistake because I realize that by the time I type it in, someone's going to call me out, so I never even go and do it. So having that accountability partner is key because it holds you accountable. It gives you some positive peer pressure, but it gives you another voice to help shut up that other voice in your head that's telling you bad things. So if you're someone that's in this situation where you find that you're self-sabotaging and you've accepted that, hey, this is a problem and I need to fix this problem, try these 5 things. So I hope you enjoyed the podcast. Like, follow, do all the stuff to support what I'm doing here. And if you have any tips that you would like to share with this trader or just share in general, maybe things that you've done to help you become a better trader or get over to self-sabotage, please share it. There's a comment section below. You can use it. I read through all of them, and it'll be great for this community to learn different tactics, maybe something that I miss, so that we can all continue on that path to becoming consistently profitable traders. All right, until next time, plan your trade, trade your plan. Take care.